I want to bring in Doug Flynn, certified financial planner and co-founder of Flynn Zito Capital Management. Doug, great to have you on this morning. Let's talk a bit about GameStop. It is official. The CEO is going to be stepping down in July. There was speculation, but now we have the official word. That stock soaring on the news. So what does this mean for GameStop and any kind of transition that it's trying to make?
I think a lot of people were dissatisfied with some of the ways that he handled towards the end there. And I know he was dissatisfied because he didn't get a pretty big payout based on how things went and some options. So, everyone's looking beyond what do they do, what's the next step for GameStop. So it's actually a good evolution to see where it goes from here, because a lot of people that got into this and a lot of people that came to the market in the last couple of months, the last year, came because of GameStop. So it's good to see the next step here, and I think it's a good thing.
Let's talk a little bit about Coinbase, which debuted last week in terms of its direct listing. Crypto has been on a wild ride. It was reaching record highs. Over the weekend, it dropped. Now crypto's back up again. How do you invest in this? Do you have any advice for people? And do you think that crypto is at some type of bubble right now?
So the problem with crypto in most firms, such as ours and many other registered investment advisory firms, is that you can't really invest in it directly. You have to deal in these alternative exchanges. And for most people, that's okay. But if you take a step back and you look at crypto, and let's say you count it as an alternative currency or that it is a currency, you want to put that in perspective and invest a percentage of your portfolio that currencies and hedging should have. Look, currencies are not investments. If you put crypto in that category, it's because they don't have earnings, they don't sell things. It's not a business per se, it's a trade. And so you have to put it in perspective. The problem is if you're going to put it in more than 3 to 5% of your portfolio, then you're basically gambling and hoping and focusing on something that may or may not come to pass. And there's a lot of uncertainty there. And it hasn't really hit the mainstream yet because it isn't really available on all the exchanges at all the firms. So I like to put it in perspective. And whether you're using it this way digitally or any other type of currency, you're basically playing that the US dollar is weakening, which we can certainly agree with when you print 40% of all the dollars that have ever been printed in the history of the United States were printed in the last 12 months.
Wow, I didn't realize that. Pretty incredible stat when you think about it. What is the biggest risk for crypto, though? What do you think in terms, what could be the downfall of crypto?
So I don't know that's per se a downfall, but it might sort of mature into a second level type of investment. And that's, of course, where there's not as much opportunity, but where it gets a little bit more legit, if you will. And what I could see is, for example, China has come out and said that they may come out with their own currency, crypto. If the US decided, you know what, we're going to make a crypto, why would I deal with something that maybe one day if I log in is not there versus it's backed by the full faith and credit of the US government? Now there's a fixed amount finally of crypto backed by the US, so the fluctuation in prices can still happen and you may get the same opportunity there, but that would completely take away a lot of all of these different areas. And so that's what I'm saying. You're speculating and it's a trade. It isn't necessarily investment per se as it is right now. And so there's a lot of risk there, hence the uncertainty and hence the opportunity.
We're also following Peloton this morning. That stock tumbling on some new warnings about the Tread Plus, the treadmill from Peloton. Is this a serious concern for Peloton? And then my other question is, other treadmills certainly have dealt with similar issues that the Peloton treadmill has. Are the feds kind of picking on Peloton here?
You never really want to get in the crosshairs of the federal government, but I think they have a lot of, they're the main brand that everybody thinks of. And so obviously it's a big problem for them because they need to get this behind them. But you're right, there are other companies that have had similar issues, and hopefully they can work through them because they need to continue to develop products. And especially right now, I think you're starting to see people are getting back into reality of life the way it was pre-pandemic. pre-pandemic, people are going to go back to work, maybe not everybody, and so they need something beyond just the typical bicycle if they're going to continue to grow as a company. So they need to fix it. I think like anything else, they'll work it out, they'll pay a fine, whatever it is, and hopefully put it behind them, but fix whatever issues there certainly are. You need to do that.
Just looking at the market overall, I know you've said that the easy money has been made. So what kind of advice do you have for investors right now?
Yeah, look, you're sitting at all-time highs as of today, and you always have to be really careful putting cash to work at all-time highs. In a perfect scenario, no one likes to see a 10 or 15% drop, but that would be just what we need after being up. Really, we're up over 90% off of the lows a year ago. Even year to date, you're up 11.5%. And so for most people, that's more than the average annual return of the stock market. We're already there. I start thinking about, is this going to be a year where that phrase sell in May and go away comes back? And so we don't know. You could get another higher double-digit year, but after the year we had coming off of where we were, it would be very reasonable and actually great to have a little bit of an opportunity to put some cash to work here. But if you're putting cash in at the all-time high, you just have to be really careful. We never like to chase. And so if you're going to do that, you want to look for opportunities. You want to do a little bit lower risk opportunities. The one category, it's really interesting. It's a green related category, but nobody thinks about it. And that's the utility sector. It's the only sector, there's only two actually, that aren't positive since the pre-pandemic highs of February of last year. Everything else is up. The market is up 25% from them. Utilities are negative. And so if you take a step back, there's an opportunity in there in that sector to really put some money to work even now where you've got some room. So those are the things you want to do at a high. You don't just chase things that are sitting at their all-time high and busting through. You look for the opportunities, or you look for some sectors that really haven't participated all the way, and that's one of them.
All right, great advice and insight. Doug Flynn, certified financial planner and co-founder of Flynn Zito Capital Management. Really great to have you on this morning.